My name is Nahashon Mungai. I'm the Executive Director for Global Markets here at Standard Investment Bank. So the reason why SIB decided to go into trade finance as a product is because if you look at trade, trade is one of the backbones of an economy, especially an economy like ours that's actually growing. Most of the trade that happens actually worldwide is done by SMEs, and the same SMEs are the ones that have the most difficulty in accessing trade finance solutions, mostly because trade finance is mostly done by commercial banks, and because of the regulatory landscape that banks operate in, they are quite often unable to provide trade finance products to SMEs at the speed required or the amount that these SMEs would actually require this financing to be done. So there's a very big gap between how much trade finance products are available in the market and how much can actually be provided. So when we looked at it from the perspective of an investment bank, we realized that trade finance has all the components that investors would look for. So you have a product that can grant you a higher yield, but without actually increasing, disproportionately increasing the risk because of this product. So it also has, when you look at trade finance, it typically has less financial market volatility. Why? Because trade finance as a product is based on the flow of goods and services. So it's not susceptible to market conditions. Secondly, it tends to have much lower default rates compared to other credit products. And thirdly, you have a product that has a much shorter period as well. So even if you end up with a default rate, the period for recovery for such a product is much lower. So trade finance becomes a very interesting debt financing instrument that investors should naturally be investing in. And here at SIB, we do not want to be left behind in this. And that is why we invested in a joint partnership with Recolte. When we looked around the market, we identified Recolte as one of the most robust independent trade finance solutions companies. And we decided to work with them because they are able to bring on board their trade finance expertise, and on our end, we are able to bring the liquidity required to make such a product work. And these two things combined allow us as SIB to continue creating a higher than average return for our investors because of then bringing in such a product into part of our product mix. And this is part of our commitment as SIB to continue providing our investors with very unique products. If you look at our flagship product, Mansa X Fund, these are actually some of the benefits of Mansa X, because these debt financing instruments, including this trade finance product that we are now investing in, helps us to increase our interest rate yield within our debt finance portfolio in the fund. That's why it becomes a no-brainer for an investment bank like ours, which is now really committed to growing the buy side and discretionary fund management to go into the trade finance business. And we believe that this really will help our investors to earn a higher return. And we also feel that it plays a big role in supporting the trade sector of this economy, supporting the SMEs by helping them get faster access to trade finance products that they need to grow their businesses. So it becomes a win-win scenario for both all the entities and stakeholders involved. Thank you very much.